I think silver's having a tantrum and is going to move into a new price reality. Meaning it's not going to go incrementally. It's going to go to what you would call a actual fair value. If you want to divide the price of silver into gold, go back 50 years and look at the screen. We're very cheap. You even go to some normal values we saw over that 50-year span, or where silver was in the bull markets of 80 in 2011, relative to gold, that is. Silver would be $200 an ounce. Wouldn't surprise me in the next 6 months. And this kind of event has happened before. It's not like I'm predicting something weird and off the page. Copper did it in 2005. Lead did it in 2007, where they were in a range for decades. And they said, enough, boom. And literally in a couple of quarters, they quadrupled in price. Separate events, not base metals, just them. So, I think we're technically set for that. All the metrics I look at say, if you're not in, don't come back in 6 months. It's a new reality. You'll be in a new reality. Look at copper, for example, back then, 2005 to 6, it quadrupled or more in a couple quarters. And a new reality for the next decades. Yeah, it's had some sharp sell-offs after that. But this is different this time. This is monetary metal too, not just an industrial supply-demand deficit situation here. Silver's also money. Even India is now recognizing that, saying, hey, okay. There's a lot of crisis events that are about to occur in our assessment, technical assessment. Stock market is going to implode. That's our argument. We think it's topping. It's been topping since late last year, flip-flopping around, confusing people. When that occurs, central banks will go berserk, because there's so many variables that will go under with the stock market, in which case the fuel for gold and silver will go parabolic, just like they will. And no, when we get to the new reality, there'll be probably a new fundamental reality when we get there, in terms of people's assessment of certain institutions, ideas, trends, in which case silver gold be institutionalized, not come back or test 50 again. Okay. So in answer, that was my answer. Yeah.
Great. Alasdair, your thoughts on the silver market at present?
Yeah, basically, I think the 2 points worth making. The one real macro point, I think, which everybody should understand, is that if you look at base metals, industrial metals, because silver is being priced as an industrial metal at the moment, then a basket of these industrial metals has fallen in value, priced in gold, to the lowest level for the last 120 years. Now, when you look at the price in dollars of the basket, it's sort of up, sort of 20, 30 times over that period. But priced in gold, it is now at an 80% discount to where it was in 1900. Now, individual components obviously change because, you've got technological change. For example, some commodities get used more than others and so on. But if you look at, if you look at the copper, that is central to the whole thing, Dr. Copper. So I think that's the first point I'd like to make. Silver is being priced as an industrial metal. The whole cohort of industrial metals has been suppressed by the paper game. The paper game, both in terms of derivatives and also in terms of fiat currencies. So that's the first point I'd like to make. If you look at the market now, however, that's sort of a further interesting point. China has been controlling the price of silver for at least 2 or 3 decades. Now, China as a silver miner is the second largest in the world, and also been importing doré, both silver doré, but also doré of, or if you like, ores, copper ores, nickel ores, lead ores, zinc ores, and all the rest of it, which of course is something like 60-70% of the supply of silver. She has accumulated an awful lot of silver secretly. We don't know how much, but it is huge. You can take, that's the way it is. Now, in recent years, she sat on the price of silver by supplying the West as silver demand has increased. This is why, if you look at the Silver Institute's numbers, it's been in deficit for the last 5 or 6 years. So how could that happen? Well, the answer is supply. China has made sure that there's been sufficient supply out of what is in the investment line, which actually is strategic stocks, to ensure that the price doesn't rise. She's now decided to stop doing that. That is why suddenly silver has got a bit under it. You've got a problem in the London market with no liquidity. There is so-called liquidity in COMEX, but whatever is there is likely to be held on to, I think, by the people who have got silver and don't want to part with it. Shanghai's liquidity also has been badly impacted. Now, January this year, and certainly for the next 2 years, for 26 and 27, China has a new policy of licensing exports of silver. And the idea is to restrict exports of silver even further. So this confirms that China has now taken the view, we can't manage the price anymore, we just don't want to lose our stocks. So there isn't going to be the liquidity coming in at a time when India, which is the most dynamic economy in the world now, I mean, growing, 8-10% per annum. It is where China was 20 years ago, is now beginning to step up its manufacture of, technology that requires silver, particularly photovoltaic cells and all the rest of it. And PV production is being subsidized by the government because, on the one hand, they're opening new coal-fired electricity generators. On the other hand, they're sort of trying to persuade us in the West that they're actually environmentally responsible. So, which is why they're doing that. But now got India demanding huge quantities of silver. And it's not just understanding that silver is a monetary metal. I mean, one of the things that's happening on that side is that, scrap silver, which you would think would be coming out on these rises, isn't coming out at all in India because people would rather hold on to scrap silver than have rupees. The whole of the situation is an enormous squeeze. And that, I think, is the initial point about where the silver price is going in depreciating fiat currencies. So we're at this fascinating once-in-a-lifetime juncture as far as silver is concerned.
Let me start by telling you something most investors still haven't absorbed. The market you think you're living in no longer exists. The structures underneath it, the interest rate regime, the liquidity assumptions, the confidence in central banks, the notion that equities always come back, those pillars have all silently cracked, and yet investors are still behaving as if it's 2017, as if this is just another benign correction before the next tech melt-up. But when you zoom out, when you strip away price charts and instead look at the deep momentum structures, what I call the internal plumbing, you see a very different creature emerging. And the monetary metals are quietly telling you that the entire financial system is rotating into a new era, and silver in particular is about to behave in a way that will shock even many gold bulls. We are entering the tantrum phase. For the last decade, gold has been in what I would describe as a disguised bull market, steadily outperforming the S&P 500 in certain waves, then drifting back, then retesting, never collapsing, never losing its momentum base. If you plot gold divided by the S&P as a monthly close chart, just that simple tool, you'll notice something extraordinary. From late 2015 all the way up to late 2024, that ratio moves sideways. Not down, not up. Sideways. That means gold, the ancient monetary metal, performed on par with the greatest asset bubble in US history. You could have flipped a coin in 2015, gold or the S&P. In 10 years later, you'd be in roughly the same spot. That's not a sign of weakness in gold. It's a sign that something massive was coiling beneath the surface. And then November 2024 arrives, and gold suddenly breaks out above an 11-year momentum ceiling. A ceiling respected through every rally high since 2014. One clean breakout. All those years of par performance collapse into a new trend. Monetary metals outperforming the US stock market. That breakout is not the end of something, it's the beginning. When you get a decade-long base on a relative performance chart breaking out, that's not a 3-month rally signal. It's a multi-year tidal shift. Now, what's hilarious, tragic but hilarious, is that retail investors are staring at their gold price chart and panicking because it looks too high. They see 4,200 gold and think, oh boy, that's gone up too fast. But if they understood dimensionality, and I've said this many times, they'd know that gold has had 2 major bull markets since being legalized in 1975. The 1976 bear low to the 1980 high, 8-fold rise. The 2001 low to the 2011 high, another 8-fold rise. Today, we are only 4-fold off the 2015 low of 1,046. We haven't even matched the prior bull markets, let alone exceeded them. If you merely equal the dimensionality of the past, gold should hit around 8,000. And everybody will still be saying, it looks overbought. But gold isn't even the main story. Silver is where the mania is going to ignite, because silver has just broken out against gold for the first time since 2020, breaking a multi-year downtrend and a massive horizontal ceiling. The spread chart, silver divided by gold, has completed an enormous structural base. And when that spread breaks out, the last two times that happened, 1979 and 2010, silver didn't go up, it detonated. In 1979, silver quadrupled in 5 months. In 2010, silver doubled in a half in 7 months. And that was before we had social media, before TikTok influencers were showing off their silver stacks like new sneakers. Imagine the viral loops this time. You give Gen Z a chart that goes vertical and tell them it's undervalued sound money and China is hoarding it. And they'll push it harder than any Wall Street bet cycle. And it's not just charts whispering this story. The macro structure is screaming it. China has been suppressing silver for 2 decades by exporting strategic stockpiles. Doré silver, silver embedded in base metal concentrates, all of it quietly shipped to satisfy Western industrial demand. That's why silver demonstrated deficits for 5 or 6 years in the Silver Institute's data without the price exploding. The supply source was not mines. It was China's strategic stock, and Beijing has now quietly shut that door. They've implemented export licensing on silver and on critical metals starting 2025 to 2027, essentially signaling, we're not losing any more metal for the West discount prices. That alone would have broken the market.
The central banks will not use silver as the backing, if you like, for fiat currency. What they're doing is they're concentrating entirely on gold, which makes sense. And of course, in these modern times, instead of having silver coinage, I mean, we have iPhones and we have instant bank transfers, if you like, electronically. So I don't see silver having that traditional role, as it were. But having said that, what matters probably more is the opinions of the collective population. Now, here I see a dichotomy. If you go to Asia, there is no doubt at all that the Asians regard silver as money. Full stop. No argument, whatever. So, I was interested to see that one of the bullion dealers in Singapore, one of the larger bullion dealers in Singapore, reported that demand for silver coins and small bars at the retail market was basically off the charts. It was far larger than what they were doing in gold. This was literally last week or so. Now, I'm getting mixed reports from these guys' opposite numbers in Europe and also in America. I think there's a lot more churning, if you like, going on. And I think there's a greater element of the view that, silver's sort of, we've missed it. We'll wait for it to come back, sort of thing. So I think over here, we're not looking at this really as a form of money in any sense. Now, having said that, when it really starts running, people will start making up the story as to why it is money. So I think then there will be a Damascene conversion and, suddenly they'll really be going into it. So I think the situation at the moment is they've got a better conception of this in the East, and we've hardly started here in the West.
And Michael, are you in agreement with that? And do you think we
Absolutely.
will see increased inflows from the Western retail buyer as well?
Yeah, no, it's again, as they say, it's the poor man's gold. Okay, a lot of people can't afford to go buy a 10-ounce bar of gold. They can, like that big bar of silver though, feels good. Okay, and it's cheap and it's going up more than gold, and therefore it entices more demand there, and it's cheaper. So. And so I think, for the average guy out there who does not going to buy a bar of gold, silver is going to be the hot potato. There's no question about it. And it wouldn't surprise me that, silver back in 1980 in the surge then was 6.5% of the price of gold, 1 ounce to 1 ounce. And in 2011, it was 3.5% price of gold. Right now we're 1.4. Okay. Why, if silver has already broken out of this 50-year decade of lethargy or suppression, might go up quadruple, you can bet that spread might too. Maybe those old highs on the spread relationship will come out as well. Meaning, hey, the high we made in 80 and the high we made in 2011 on a relative basis to gold, even those are coming out, in which case you do the math. take silver to 6, 7, 8% of the price of gold. Don't be surprised. In other words, it's a rational move for silver to do what it's doing now, because it was irrational of it to stay suppressed for so long. And it's now saying, out of my way, and it's not going to observe the norms of market behavior. This has happened with other markets. Copper did it in 2005, quadrupled in a couple quarters, and lived in a new reality after that. Lead, same thing, 2007, lived in a multi-decade range, and quadrupled in price in a couple quarters and lived in a new reality.
Now let me take this deeper, because what's coming is not just a silver rally, it's a restructuring of global financial expectations. When a monetary metal breaks out against the S&P 500, then breaks out against gold itself, and then breaks out against a 50-year historical valuation band. That is not a price movement. It's a message. The message is simple. The monetary system is losing credibility, and wealth is fleeing to the last remaining exit. People often ask me, Michael, what's the catalyst? And I always laugh, because it's never one catalyst. It's an accumulation of fractures, a pile of dry timber waiting for a spark. And sparks are everywhere now. You want a spark? Look at the US Treasury market. The 30-year Treasury is behaving like a penny stock. Wild gaps, sudden collapses, liquidity vanishing on random Tuesday afternoons. When the world's risk-free asset trades like a biotech IPO, you know the endgame is closer than people think. Even the New York Fed President Williams came out and basically said the Fed needs to start buying bonds to improve liquidity. That's like the captain of the Titanic announcing over the loudspeaker, "We're taking on a little water, but don't worry, we're just adjusting ballast." When central bankers talk about liquidity, the translation is simple. Somebody important is on the verge of blowing up, and they're hoping you don't ask who. Meanwhile, the stock market is levitating on narratives, not fundamentals. Corporate earnings are nowhere near supporting these valuations. A handful of mega-cap tech stocks are holding the entire index aloft, like circus elephants balancing on a step stool. And below them, you have thousands of smaller companies gasping for breath, unable to refinance debt at 7, 8, 9% interest. We've never seen a market so top-heavy, so illusion-driven, and retail investors are still treating it like the glory days of 0% rates. When this structure gives way, and it will, sentiment will collapse faster than portfolios. And that collapse will be the accelerant for the metals. Stocks drop, people panic, central banks print. It's Pavlovian at this point. They don't even pretend there are alternatives. And here's the thing. The Fed doesn't have the luxury Volcker had in 1981. Back then, he could raise rates to 19% because the national debt was trivial. Today, even 5% interest rates mean the Treasury is paying out over $1 trillion per year just in interest. If they tried 19% now, the federal government wouldn't last 2 weeks. So the only direction from here is down. Down in interest rates, down in credibility, down in purchasing power. And every downward tick is a gift to gold and silver. But silver is not just a monetary metal, and that's what makes this moment so historic. Silver has a dual identity, monetary and industrial, and both sides are under strain simultaneously. Industrial demand is exploding. Solar, defense applications, electric vehicles, medical tech, data centers. The #1 fastest growing industrial commodity input worldwide for 5 years has been silver. Solar manufacturers in China and India are pulling in more metal than ever before. The IEA says solar capacity will triple globally by 2030, and silver intensity isn't dropping, it's rising. If you remove subsidies, solar demand still grows. And the defense sector? Completely inelastic demand. When governments need guidance systems, satellites, missile components, radar, and communication hardware, they're not waiting for dips in the price of silver, they just buy. On the investment side, meanwhile, Western buyers have barely woken up. I can count on one hand the number of major hedge funds with meaningful silver exposure. Retail buyers in the US treat silver like a hobby, not a strategy. But in Asia, it's a different story entirely. In Singapore, one of the largest bullion dealers reported last week that silver demand, coins, small bars, poured bars, was off the charts compared to gold. People are lining up to buy. But in Europe and the US, you've got ETFs that can't source supply and retail investors who think silver already ran too far. That's the divergence that fuels parabolic moves. When the West finally wakes up, there won't be metal left to buy. Let me dig into China for a moment, because few Western analysts understand how much China has influenced the silver market. For 20-plus years, China kept the global silver price artificially low by supplying the West with metal, either directly or via refined concentrates. But that came from strategic stockpiles, not fresh mining. China mined only part of what she exported. Most of it was accumulated metal redistributed to feed Western industrial production. That strategy worked for 2 decades, but now China is stopping exports, implementing licensing restrictions, and clearly signaling that silver is a strategic asset. In other words, we're not letting you have this at discount prices anymore. And when the largest marginal supplier leaves the market, prices must reset dramatically higher. Now pair China's retreat with India's surge. India isn't just consuming silver, it's refusing to release scrap. When silver rises and Indians still won't sell, that tells you the monetary psychology has shifted. In a nation of 1.4 billion people, that matters. Scrap isn't coming out because people trust silver more than rupees, and that is how monetary transitions occur. Quietly, culturally, steadily, until one day the market snaps. The Western media, they're asleep. They're addicted to tech stocks and soft landing narratives. They'll talk about NVIDIA's data centers for an hour, but won't mention that silver inventories in London and Shanghai are disappearing. They won't mention that backwardations, lease rate spikes, and physical tightness often precede explosive market shifts. They won't mention that India's silver ETFs had to suspend creation of new units because there wasn't enough metal. Because none of that is clickable. It's not emotional enough yet. But when a major institution blows up because they couldn't deliver silver they had sold short years earlier, you'll see silver on every headline. You'll see CNBC run a segment titled, "What is Silver? Should You Care?" You'll see politicians mumble about speculators causing volatility because they still don't understand monetary metals. Until then, the opportunity belongs to those paying attention.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.